Media recognition from Bloomberg, Reuters, recycling trade publications. Patented process for 100% recovery of critical metals, including cobalt, lithium, nickel, manganese, aluminum. American Manganese is focused on recycling lithium-ion batteries for electric vehicles. American Manganese trades on the TSX Venture, AMY, the US, AMYZF, and Frankfurt 2AM. For more information, visit AmericanManganeseInc.com or phone me, Larry Ray, at 778-574-4444.
You're listening to HowStreet.com radio, available online at TalkDigitalNetwork.com. Welcome to HowStreet.com radio, the online source for market opinions. Here is Jim Goddard.
My guest is Eric Hadik, CEO and president of InsideTrackTrading.com. Welcome back to the show, Eric.
Oh, thanks for having me back, Jim.
Eric, cryptocurrencies, specifically Bitcoin, is there a cycle to them?
Well, because of their limited history, I for the time being, apply related cycles when I'm talking about long-term swings and turning points. But Bitcoin in the last 3-4 years has begun to demonstrate some fairly consistent weekly and monthly cycles. But going back to what I was saying first, that I kind of lump them in with the dollar versus anti-dollar cycles that I've talked about for the last decade. And one of the most consistent cycles in that realm is a 40-year cycle that I've documented going back hundreds of years. And here in America, going back to the Revolution, and even back into the 1690s in the Plymouth Bay Colony, but on a very consistent 40-year basis, there seems to always emerge this heightened battle between hard currency and alternatives, fiat currency, and again, obviously in this most recent swing, digital currency as well. But you've seen this battle rage on, and you know, it's always there underneath the surface or right at the surface, but it's on that 40-year interval when for about a 6 to 8 year period you see a real intensification of that battle. And, you know, I've discussed this before, so I'll just hit on it real quickly, but as I said, in the 1690s, you saw the Plymouth Bay Colony experiment with some fiat currency. Moving forward to the 1770s, and you had the continental currency, which was a paper currency, issued during the Revolutionary War, and by 1781, it had pretty much gone bust. And 40 years later, you had a battle for the rechartering of the U.S. Bank, and with it, all the implications where hard versus paper currency were concerned. 40 years later, 1860s, you had, or 1850s into the 1860s, you had this, first there was a reduction of silver in the currency. And that led to a suspension of silver payment and ultimately a suspension of gold payment, and which gave way to the inflation of the Civil War years. And 40 years later, in the 1890s, you had the entire 1896 election based on a battle between gold standard, silver standard, and or paper currency, and the famous Cross of Gold speech. And it led to a gold standard being enacted in 1901. 40 years later, in the 1930s, you had the suspension and confiscation of gold and silver, and it led into throughout the 30s. And then in the 1970s, you had just a complete inflationary move, as right in the middle of there in 1976, the Jamaica Accord that was basically the globe's divorce decree from gold and the ramifications of that. And so coming into the 2010s, mid-2010s, I was describing where it was time for this battle to emerge again, and it would usually go from the 3 or 4 year of the first decade into the 1 year of the following decade. And so one of the things that I described back in 2013, 2014 was I thought that gold, that the dollar would be dropping throughout that time frame, but you might only see it when compared to things like gold. Because often if you just look at the dollar index, it's versus other fiat currencies, so that's just a battle of the healthiest horse in the glue factory. And so, sure enough, 2015 gold bottomed, and since then, the dollar versus gold has been declining. And my conclusion was that 2020, 2021 would be the parabolic years for gold, and then as we got into the middle of that time frame in 2016, 2017, I started talking about cryptocurrencies' role in that same scenario, that dollar versus anti-dollar, that hard currency versus fiat currency. And my conclusion was that 2020, 2021 would be the parabolic years for both precious metals and for cryptos. And so that's kind of the broad, overreaching or overarching cycle that I've been looking at and anticipating movement in precious metals and in digital currency. And so I think you're actually into that. Now, obviously, when you do have these parabolic moves, trying to get in front of them or time the exact top is usually pretty foolish. But we're in that time frame where a blow-off peak is more likely from a long-term perspective. Obviously, that could stretch out for several months, but when you hone it down to weekly and monthly cycles, I thought we would see a penultimate peak in Bitcoin, the peak before the final peak, coming into this time frame, and my target was 54,000, which it has spiked above. I think it got up as high as 58,000, but I see 54,000 as a key level where I expected this penultimate peak and a pretty substantial pullback from there, but then there would be the opportunity, depending on what happens in the interim or in between that, the current peak and future cycles, the potential for one more high before this phase of the bull market is complete.
We'll have more with Eric Hadik right after this.
Aben Resources Limited is a gold exploration company with significant projects in British Columbia and the Yukon, trading on the TSX Venture Exchange, symbol ABN, and the OTCQB, symbol ABNAF. Surrounded by world-class gold deposits and mines, Aben's 23,000 hectares Forest Kerr Gold Project is located in the heart of the Golden Triangle in northwestern BC. For more information, visit us at abenresources.com.
Welcome back. We're speaking with Eric Hadik. Real currency, we might put it, or fiat currency. How is the U.S. dollar going to do, and what kind of a cycle is it in right now?
The dollar has been, again, I go back to a little bit broader cycles, not as long as a 40-year, but the dollar has been moving on a very consistent 3-year cycle and overarching 6-year cycle for the last 30-plus years. And the most recent phases of that came into play in early 2020 for a peak in the first quarter of 2020, and that was 3 years from early the first quarter of 2017 when it had previously peaked, and that 3-year cycle just goes back to it alternates too. I should explain that anytime I'm talking about cycles, they will rotate from successive lows for usually four periods, and then alternate to highs from there. But the dollar previous to that 2017 peak had lows in the first part of 2014, 2011, 2008, 2005, and I lay out this in my monthly newsletter in a visual form so you could see how this kind of sine wave cycle progression unfolds. But so the dollar hit that peak in 2020, and my outlook since then has been that it would move progressively lower into the first half of 2021, and then ultimately would work back up into the first part of 2023, the next time that 3-year cycle comes into play. But I think that we've got one more leg down in the dollar index in the coming months, probably down to around 88. That's a critical level of support that is in all of my work. But before doing that, we've been in a rebound mode that I thought would take the dollar up to at least 92 to 92.50, and that'll probably be one of the most decisive points. But that even dovetails with what I have been looking for in gold, and gold has been in a corrective mode for 6 months now. And if the dollar sees a little bit more of a bump up right here in the coming week or two, gold has the potential for maybe one more spike low, but then that would be the time frame when I think the dollar would turn back down, head towards its recent lows, and spike down to some lower lows, probably in the second quarter of this year, and gold would move back up during that time frame into more significant cycles for gold that come into play around May of this year. So I think that the dollar is really, for all intents and purposes, has been in a wide trading range for a couple of years, and in the coming months, I think it'll likely stay locked between 88 and 93 as it kind of evolves through this cycle.
Any thoughts on the Canadian dollar?
I don't keep as up to date on that. I do address it each month in my monthly newsletter, and one of the things that I described in the Canadian dollar was a very consistent 15 to 16 month cycle that timed the low in March of 2020, and I think it will time a secondary low in June or July of this year. In the meantime, in between there, obviously it's in somewhat of an uptrend that I expect to peak in probably March, and then see that pull back to the secondary low in June, July. So it's been coming off of a major bottom, and I think it's continuing to build a base. But I think that we're getting up towards some pretty solid resistance that I have at 81.5 to 83. That was really the upside target from the low of last year. And if we could see that tested in the month of March, I think that will set a multi-month peak and see some correction from there.
We'll have more with Eric Hadik right after this.
Engineer Gold Mines is focused on the exploration and development of the historic high-grade Engineer Gold Mine situated 32 kilometers southwest of Atlan, British Columbia. Engineer Gold Mines is fully permitted for surface and underground exploration with the drill program now underway. Engineer Gold Mines Limited trades on the TSX Venture Exchange, symbol EAU. For more information, please visit us at engineergoldmines.com.
Don't miss out. Stay informed. Receive the HowStreet.com weekly recap with thought-provoking podcasts, radio, and articles delivered to your inbox. Sign up for the HowStreet.com weekly recap on our homepage at HowStreet.com.
Welcome back. We're speaking with Eric Hadik. Eric, the Fed wants to keep interest rates as low as possible, but can they stop the natural cycles that control interest rates?
Yeah, the Fed wants to do a lot of things, and to some extent they do what they want, but the market forces are definitely battling against the Fed's objectives right now. Last year and leading into last year, I described for probably 2 years before the fact that the middle part of 2020 was the recurrence of a very consistent 4-year cycle in bonds and notes, and that based on the whole wave structure and the longer-term cycles, that I thought we would see a major multi-year top in bonds and notes in 1 month either side of July 2020. And of course that, since bonds and notes are the inverse of the actual interest rates, that would mean a major bottom in the corresponding interest rates. I still think that is the case. I think that we saw a major top in bonds and notes. The next phase of that 4-year cycle is in 2024, when I would expect to see a lower high, but in between you would expect a 2.5 year downtrend before a rebound into that time frame. And there's a lot of other factors too that lead me to that conclusion. So I think that the underlying interest rates will be doing just the opposite, that they'll be edging higher. Going back to March and April of last year, I described why I thought we were then about to head into an inflationary environment, that the first big phase of that should last into May or June of 2021. I still think that's the case. We're starting to see more acknowledgement of that in recent months. And just everything too, as we come out of COVID and you get more talk of recovery and more spending to boost economies, all those things are going to feed into this inflationary cycle and make it that much harder to keep interest rates at rock bottom levels.
Any thoughts on the crude cycle?
Actually, the crude cycle, as you know, is very, or the Canadian dollar often tracks very close with the crude cycle, being as much of a petrocurrency as anything. And it is similar that I thought we would see a nice move up into, actually April or May was the time frame that I've been focused on. And my initial, or my primary upside target in crude was $60 to $65, but we're now bumping up against that level. So if we broke above that, it certainly has the potential to go up to another level of upside targets. And but I do think that we're going to see a pretty significant peak in that April-May 2021 time frame. Between now and then, there still is some upside potential. I've been bullish in the energy markets for many months, and I think that another one that's going to surprise some people, I still contend that natural gas is going to see, it's already seen one big run-up last year and the start of another run-up more recently, but I think that it is only in the middle of a bullish cycle that's going to last at least into December 2021, January 2022, and with a couple of significant upswings that I expect in that time frame, in the intervening time frame.
Eric, thank you so much for chatting with us.
Thanks for having me back, Jim.
My guest has been Eric Hadik, CEO and president of InsideTrackTrading.com, Inside spelled INSIIDE. He was speaking to us from the Chicago area. If you have any questions for Eric or any of our other guests, you can send them to info@HowStreet.com, our YouTube channel, Talk Digital Network. Find us on Twitter @HowStreet. We're also on Facebook. I'm Jim Goddard. Thank you for listening.
Comments made on HowStreet.com radio are an expression of opinion only and should not be construed in any matter whatsoever as recommendations to buy or sell any financial instrument at any time. Available online at TalkDigitalNetwork.com. HowStreet.com radio is a production of HowStreet Media Incorporated.